All right. Live on YouTube. Just give me a second to confirm Facebook as usual. Uh, okay. What is this error message? Okay. I can't tell. Oh my god. It looks like my computer is freezing. I can't tell. Is this working? Okay, I think I'm on YouTube, and that's gonna have to be okay for now. Um, so welcome back, YouTube. Thanks for joining in again. Today is Thursday, and today is a little bit of today is a little bit different than my usual trading blog where I talk about my profits and losses and whatnot. I think I'm gonna start doing that a little bit less because what I find myself after having taken such a huge hit last week, I find myself looking at the bottom line, the profit and loss, way more than I should. And I know originally when I first started this vlog, my my commitment was to focus more on process, and that's what I kept telling myself. And I don't think I've done that nearly enough, nearly as much as I should have, and that I should be doing because it's definitely a little bit of a trigger when you take as huge of a hit as I did. Like last week was my worst week ever, and even this week it's not nearly as bad, but it's not profitable either. So um, uh, there's there's a lot of issues happening with my trading that has to change. And this is one of those things that is a, I don't know if you guys are watching and you're trading, or if you're just watching this as a form of entertainment, but if you're a trader, then hopefully you understand that it's one of those things that is a lifelong commitment. It's like kind of like, I'm not married, so I don't really know, but but I relate to it, and I've heard this metaphor be used before. It is kind of like a marriage, right? You have to work at it for life, and until you retire or something like that. But it's definitely decades into the game. It's not something that you um, that that you do for like a few months or a few years, or and then all of a sudden you're financially free. It's not real. It's not quite like that at all. And I know that's the kind of mindset that a lot of people come into trading with, to thinking that they're gonna make like $1 million really fast, and then they're gonna turn that into 10 million even faster, and that's completely not the case. Even though mathematically the possibility is there. So so for me, recognizing that, I am really taking a look at uh, like how I'm gonna be doing things a little bit differently. And my computer's like frozen right now, so I don't know if this is I can't click anything. So this is gonna be tough. A lot of issues today. I was on a YouTube live, watching a YouTube live, um, for a different training program that had like thousands and thousands of people on it, and that completely fell apart and went down the drain because technical issues. Their broadcast got screwed up, and so I wonder if there's something wrong with like the servers. Maybe they're overloaded because too many people are going on lives these days because of COVID or something. But like right now, I can't click. I don't know if you can hear my mouse click, but I can't click anything right now. I don't know if my it looks like my video is working, but I definitely can't click anything. And so this is one of those things um, that really up. Okay, I can do that. So I'm gonna start closing. I think I screwed it up. Okay. I can't tell if I'm still online. Okay, I think I'm still online on YouTube, and that's just gonna have to suffice for now. Today was a very strange day. Not very profitable, and I am gonna start off with one complaint here, and more of a point of confusion than a complaint because I don't want to get into a negative mindset. But um, I actually had a trade going for me, in my favor on crude oil. Finally, finally some a little bit of love from crude oil. I took the big quarter here, the 42.50, um, and I took it recognizing that I got stopped out of the trade that I was in yesterday. But the overall trend is bullish. Not by a lot. It is a very weak bull trend. Not gonna lie. If you look, let's zoom out even further. This is a weekly trend. So after the bottom, which is so this contract didn't actually go negative, the October contract, but you can see there was a huge rally, since May, June, July, and since July and August, it's just been kind of tapered, like very, very modest movement, still movement up, but very, very modest. And you can see that if you look at the past few days, it has been just staying inside of the range where you see these dotted lines. Let me get rid of this orange zone for you because you don't need that. It has been pretty muted, right? This is, the daily. These are all daily candles. It's been staying inside of this range, right? A little bit outside of the typical range, inside of the dotted green line range. And so that's when it's most tricky. And you can see, like, I think these were all losses, to be quite honest with you. Most of these were losses. If there were wins, they weren't wins by a lot. And it's been very, very difficult. Although even inside of this range, if I zoom in a little bit more, the quarters trading has been working. I've just been missing, right? So this worked 3 to 1, 4 to. This one worked 4 to 1. This one worked 4 to 1 or more, 5 to 1, depending on how you want to look at it. But it definitely would have worked 3 to 1, 4 to 1 to the red line. And so now we're playing above the red line inside of this range, and so I took this. But at the same time, I was working for up my profits, and I didn't. I got stopped out automatically. My target was definitely not hit, but I got stopped out, and I think it was because I had too many trades open, and it was a margin call. I think. I think that's what I mean. I got a notification for a margin call, I think they closed my position. So I think it's because I'm in this trade. Corn takes up a ton of margin, and especially overnight. And I took this quarter, right? There was a zone identified by someone that someone who I'll actually listen to, And so it ended up being right above this quarter right here. So I took it. I think I talked about this yesterday, and here we see that I mean it is in the zone and RSI is above 60, but we're getting evidence of like divergence. Divergence again, divergence here, right? So this tells me momentum is starting to die to the upside. And so I'm looking for a retracement down to this little red line, the 500 even. I'm looking for that right now. I didn't get it today, earlier today. It stayed negative. It didn't stop me out, but it did stay negative. I didn't. You'll notice I had my eye on it for a while, so I didn't set and forget this. Um, it did look like it was going to. So what's concerning is the higher lows right now, to be honest, right? So I took the trade at the green line here. Um, you can see that it wanted to drop down. It wanted to drop down. This is 30. These are 30-minute candles. It wanted to drop down, and when the market opened, it went up and kind of stayed up. It wouldn't give me a positive wick at all. So that is kind of concerning. So I kind of wish that they pulled this trade, because it is the bigger margin trade, and let the profit run. But I'm not really understanding how they decide to do those things, you know? Anyway, so today is a little bit more of a different kind of day. It's not so much... so today is less about trading and my P&L, my bottom line, and more about just a little bit of a crazy coincidence that happened. Although to me it wasn't really that much of a coincidence, but it might have been if you follow me. That yesterday I posted a video that I put together. I tightened up a Facebook Live that I did on May the 4th, right? So if you're a Star Wars fan, you know that May the 4th is like Star Wars Day, because it's like, you know, like May the Force be with you kind of thing. So I actually did a Facebook Live back on May 4th, where I talked about why the stock market always goes up over time, and there's like there's truth to it, but there's also misunderstanding and misconceptions about it. But the second reason that I put in that video is something that is a very, very significant fundamental importance today. So let me just put this here. And this is the video. I have the video queued up from yesterday. And let me just play this. Just give me a second. Now, the second reason the stock market always goes up over time is also something that should be pretty common sense, but we don't usually attribute this to the stock market, and that is inflation. Depending on who you ask and what period of time that you look for inflation, and in terms of how you want to measure it, you're going to find that it's something around 2 to 3% per year on average. If you're saying, oh, the stock market over the past 100 some odd years goes up 10% a year on average, and inflation goes up 2 to 3% a year on average, it's not as much of an increase as you think. The number of dollars might be increasing at 10%, but the number of dollars means very little. If you had $1 million in 1930, that's worth a hell of a lot more than having $1 million in 2020. So the number of dollars is not really how we should be measuring wealth. Inflation goes up 2 to 3% per year. The stock market goes up 10% a year on average, if you look at long periods of time. This year is not a good example of that. 2020 is not a good example of that. But you know what doesn't keep up with any of that stuff is wages. Your annual salary, the median or average annual salary per American worker doesn't keep up with any of this stuff. One of the things that makes this a particularly important topic today in 2020 is that we just recently had a stimulus bill. Now this kind of is a game changer. When the coronavirus pandemic hit, the global economy shut down. And imagine the global economy as like the body of a human. And you're the medical surgeon or a doctor in charge of reviving this person. But they're just bleeding out, right? And so you might do some emergency procedures that are not healthy for them, but that you might give them a shot of like a steroid or like morphine or something, or some kind of narcotic injection, which is not healthy, but it's absolutely necessary to revive them in the moment. That is what the stimulus bill of $6 trillion represents. Why do I bring this up? I am not blaming them for injecting $6 trillion into the market. I do believe that it was a move that saved the economy, right? It saved the stock market from plummeting any further. So I do think that it was a necessary move, but here's the side effect of it. You know, if you take, just like we have in the medical field, if you take prescription painkillers for a legitimate reason for too long, it's very easy to get addicted to it, and that's a big problem that we have in this country. Similar kind of situation with the stimulus bill is that, yes, it was for a good reason, but the resulting side effect that we don't see yet, but is very likely to happen, is inflation is going to be much higher than 2 or 3% in the near future, in the long-term near future, in the next couple of decades. I don't have a crystal ball. I don't have a degree in economics. I am not an expert. I am not Alan Greenspan. No reason you should actually listen to me. Adding 2 and 2 together and connecting the dots, adding this much money into the stock market definitely lowers every single one of our dollars value in our pocket, which means inflation is definitely going to go higher, in my opinion. The third reason that the stock All right, so I may have played a little bit too much of the clip. I forgot exactly where the point that I made came from, but it really comes from the fact that, like, I mentioned that inflation is not going to stay at 2 or 3%. It's definitely going to go up. It's weird seeing my face on top of my face. That's really weird. Let's get this out of here. The point there in that video was that inflation is not going to stay at your typical 2 to 3% as it has been historically. If you look at the Fed announcement today, Jerome Powell announces a new Fed approach to inflation that could keep rates lower for longer. What that also means is this point right here. That means that the central bank will be more inclined to allow inflation to run higher than the standard 2% target before hiking interest rates. So the Fed aims for 2%. What they actually achieve has been historically closer to 3%. But now they're saying purposely and intentionally, so that you can't blame them for anything later, that, hey, you know what? We're okay with it being higher than 2% for the foreseeable future until we can, figure out to get the world back to normal. And what that means, if that's what they're saying openly, what do you think it means for what actually happens? What do you think the actual measurement is going to be? If they're aiming at 2 and they actually end up closer to 3, under normal circumstances, 2 to 3%, you might be thinking is like, oh, you know what? It's only 1%, not a big deal. But if you look at it as a percentage, it's 50% higher than what they thought it was going to be, what they were shooting for. So they're not saying anything, They're not giving any kind of indication about what their target inflation rate is going to be. They're just giving themselves leeway, saying, you know what, we're going to allow it to run higher than the standard 2, not specifying by how much. That's a little bit scary, because what this means is that up until now, if you haven't been increasing your net worth or getting a salary raise, or increasing your assets, or your 401k account, or your IRA account, everything that you have that can be measured by dollars, if that hasn't been increasing by a minimum of 2% every single year on average for the past, I don't know, however long you've been earning money, you've actually been getting poorer. And that might explain why you might be feeling like, you know what, I've been getting raises every now and then, at work, but I don't seem like I'm getting any. I don't seem like I can. It doesn't feel like I can save any money, and things seem to be getting expensive, and it just doesn't feel like, even though I make more money now than I did 5 years ago, it just doesn't feel like I am richer. Well, inflation has had a huge part to do with that, especially since the global financial crisis in 2008. We're about to see another round of hyperinflation again. This is Jerome Powell pretty much admitting that. And this is something that we, as traders, as people who understand how money works, we kind of connected the dots, as I said in the video. And that video was back in May. You can tell because my hair was completely different. That was, I wonder if, during COVID, I have not been able to get a haircut, and my girlfriend has been cutting my hair for me. And I like what it is right now. Just as a side note, I like how it looks right now. Better than I liked it. I liked how it looked back in May. So I'm not bullshitting. It's a different. It's a different time, right? And so we call that back in May, and it was a general consensus amongst me and a bunch of other traders that I know, especially currency traders, because currency and some futures traders, because you can trade interest rate in futures as well, but currency traders have their pulse on these types of things way more than stock day traders, for example. Because it affects currencies way more, way faster, and currencies are way more sensitive to things like this. Whereas the indices are, they definitely they're definitely sensitive to it to an extent, but currency traders tend to be more sensitive to it, actually. So this is like Jerome Powell, the Fed, just basically saying, without really saying, that, yeah, you're going to see some higher inflation. And how much higher? I'm not going to specify, because it could start to get astronomical. It could, as I say in the video, I say the word astronomical. It could start to get kind of crazy. And a lot of people are in a little bit of a denial about that. When I've said that to non-traders before, they're like, no way. But you could see, this is in a little bit of an extreme example, but I know that a friend of mine, trader friend of mine, said we could see like hamburgers become like, $50. And that might be a little bit of an exaggeration, but if you go to a decent burger joint in Manhattan, they're already like $20. So just a little more than double. I think everything can become a double kind of. I think prices around us, the average cost of everything, could double over the next decade, which means you need to, over the next decade, you need to be bringing, and I'm not making a claim. Again, just like I say in the video, I'm not making a prediction that I don't have a crystal ball. I'm going to say that one more time, just like I say in that video. But So far we've been right on the money, right? People who have been, it's not just me, people who have also been saying like, you know what, we're going to see some hyperinflation. We've been right on the money, and Jerome Powell is basically, without, causing a mass panic, he's basically proving us right. And over the next decade, right, we could see things really get really expensive around us, which means if you're not bringing in a lot more money over the next few years, over the next decade, and preparing, if your stock account isn't like, outperforming inflation, whatever it ends up being, let's pretend it's like 5%, right? And your 401k or IRA is averaging 5%. Even if your 401k is free, which is, I guarantee you it's not free, if you're just matching 5%, you're not making money. You're not gaining wealth. You're actually you're actually getting poorer. If you stay at the exact rate of inflation, you made more. You increased the number of dollars in your account, but you didn't get richer. Money is only as valuable as what it can buy. And if you can buy the same amount of stuff with $200,000 10 years from now as you can $100,000 today, you didn't make any more money, even though $200,000 is. Let me say that again. You didn't get any richer, even though $200,000 is double $100,000. And it's this kind of thing that is extremely important to recognize. And it's like, I talk about the money game, and how, if you think of a game, you think of like, well, how do you keep score in a game, in a sport, or basketball, football? Like, how do you, tennis, for example, has a weird way of scoring. It's not, you don't count by one in tennis. Nor do you in football, right? You count by threes or sixes, ones and two, like whatever, like who knows. So you have to understand how the score works, right? If you look at a tennis match and you see 15-30, and you don't have any concept, or you have no understanding of how tennis scoring works, you might be like, wow, that person is getting killed 15-30. Jeez, right? And that's kind of what a lot of people are doing when it comes to measuring how much money they actually have, how rich you actually are, how wealthy you actually are. Most people are using number of dollars as a measure of that wealth, and this is just more proof. If people who speak the language will understand that this is a red flag. This should create a sense of urgency, especially in professional investors, that this over the next decade or so, it's not enough to just get average 6 to 8% per year in my 401k. I can't tell you how many people who come to me kind of bragging that they're up 12% over the past. They were. So I had one person actually come to me on on Facebook and say that they are, over the past 12 months, their index fund has been up 16%, and they're very proud of that. And I guess I'm wondering, well, why are you proud of that? Like, what makes you think 16 was good? They're probably using the average rate of return of like 8% or whatever you want to use as a measuring stick. That measuring stick doesn't apply anymore. And it should have never been your measuring stick in the first place, honestly. Right? The measuring stick you should have been using is what's the S&P doing? Right? That's the more accurate measuring. Even that's not the the most accurate measuring stick of how well you're doing, but it's the easiest one to find. That's the closest approximation to the true index number. So it's like, that's the one that most people will accept as the closest approximation. But so if you're not at least matching the S&P, then you're not actually doing well. But people have been programmed with this idea of 6, 8, 10% if you're really doing good, right? And they think that's the measuring stick. A fixed number is the score to beat. It is absolutely not. And news headlines like this, it doesn't smack you over the head with it and make it obvious to be like, hey, the new measuring stick. No one's gonna tell you except for me. That's why you follow this channel. Hopefully, you follow this channel. No one else out there, no financial advisor is gonna tell you that the measuring stick, the score to beat for your retirement account, it's always changing. And even though that's the truth, what they are going to tell you is, oh, well, you did above 8%. That means you did good. Well, the S&P did 19%, and I did 11, right? And you're making it sound like I did good because you're using 8 as a fixed number as the score to beat, when really the score to beat in reality was 19. I'm taking numbers from last year, right? Those are the numbers from 2019 that I'm using as an example. So that's the action. So today we had the Fed announcement, and I felt like this was a lot more important to share than like how much money I made or lost today. Just to be perfectly clear, I lost money today. Just in case that wasn't obvious, I did lose money today. And the whole concept of like this margin call, honestly, is a little bit annoying to me. And I am heavily considering going back to Forex because I think my $5,000 account does not provide enough margin for the kinds of things that I want to be doing in futures. I think 5,000 is enough to day trade but I don't want to day trade. I want to swing trade. I do take more day trades than swing trades, but I totally recognize that my swing trading is where my money is at. So I actually put together this slide that I wanted to write it out and kind of organize my own thoughts. So here we have my futures sway trading plan. Sway being a combination of day trading and swing trading. Let me turn on my laser pointer here. How do I turn it on? Yeah, I love this thing on Google Slides. My mouse is now a laser pointer. So sway is a combination of day and swing trading. I'll talk about what time frames that I use, and I'll talk about it. This is the best for beginners. I consider myself to be a beginner. I'm less than a year into the game, actually doing it for real, for like seriously, and not just practice mode. I'm doing it for real. I'm not doing it as necessarily my primary source of income. As you can probably tell, my goal every month is to make like $2,000, $2,200. That's not really a great income, but it is a decent like side hustle, right? And so this is the futures trading and day trading in general is a great way if you can consistently get $2,000 profit per month, then it is a very, very quick step to add a zero to it. It is the most scalable game and an investing area, right? Investment arena that there is. Nowhere else can you add zeros as easily as you can in trading in the financial markets. That's what attracts people to the financial markets, right? They want to 10x and 100x the balance on their account, and with that power also comes great risk. That's the drawback. In order to be able to do that, you need to take a lot of risk if you want those kinds of results, and if you want that kind of a reward. So for me, I'm $22,000 a month is aggressive it's like a goal to strive for off of a $5,000 account. That's 40%. And so 40% per month is a ridiculous goal. But it can be done. And so I'd rather like shoot for the moon, and then, if I miss, I'll still land amongst the stars kind of thing. This month I am negative. That last week took me out. Sucks. And this week has not been much better. It's been up and down, up and down. And if I realize all my profits, I'm a break even at best. Right. So it looks like I'm going to, I hope, knock on wood, this doesn't happen, but it does look like I am going to finish the month with a loss, no, with negative profits, unless I can really come through over the next 2 days. But I'm not going to add that kind of pressure on myself necessarily, because I have a lot of other projects in the works that demand my attention. And so this is more of a side hustle thing but something I'm committed to getting better at, right? That's where the metaphor of the marriage comes from. This is the most lucrative kind of game there is, but it has the steepest learning curve of anything else, right? It's like worse than golf. A lot of people look at golf as like the hardest sport to learn how to play and get good at. And I think I agree. I struggled for years with golf before I actually started to enjoy it. And I'm less than a year into futures trading, and I think it's going to be the same. It feels the same. I'm just a little bit older and more mature now, and I can handle the pain a little bit better than when I was a teenager, middle school kid that really hated how much I sucked at golf, but my dad made me learn how to do it anyway, and now I really love it. And I think that this is going to be, I have a love-hate relationship already with this thing, right? But I am committed to it no matter what, right? So let's go right into the plan. So let's see here. The trading premise and requirements. This is all I really wanted to map out today. And so what I said was, in order to take a trade, and this specifically is to prevent over trading, which is one of my tendencies. It's a weakness of mine. I need 2 or more of the following. So price near a quarter, which means you got to know what the quarters are, right? So there is that. Momentum, RSI, you got to know how to use that, right? You got to have RSI supporting it, not going against it. I can't tell you how many trades I lost not paying attention to RSI or intentionally going against it, and it just chewed me up. Sometimes it works. Yesterday it did work on a trade that I didn't take, and I was like, oh man, I should have broken my rule. Of course there are exceptions to every rule, but in general, for a safer trade, I want to have momentum support the price. I also want to have fundamental and seasonal support. So like right now, we saw that crude oil was, it's still in a bullish trend. It's going up, but it's very weak going up. It's very slow this past 2 months. Well, that's because we're in the season for crude oil to go up, right? And there's like charts and resources that you can access to determine like, oh, in what seasons and what months does crude oil tend to go up, and crude oil tend to go down. This is one of the things that really attracted me to futures, is that there's a lot of agriculture products, there's a lot of commodities like the metals and whatnot that come into play in futures that have a season to it. So it's kind of like if you were to bet on the price of like snow boots here in New York, because winter is pretty bad here. If you bet on them to go up during the winter, and you bet on the snow boots prices to go down and more sales to happen during the summer, right? That in general, there's always exceptions, but in general, you can see that that kind of seasonality makes sense. And fundamental support, like I just spent like 15-20 minutes talking about inflation. That's fundamental support. Okay, long term, short term. Same, like whether it's long term or short term, you want seasonal or fundamental support. So the short term is like every day, opening range. As the market opens, the market makers need some time to settle their orders. That's why you see a lot of action in the first few minutes, and when that settles, right, when there's more buys, then the market's going to go up, and then when there's more sells, the market's going to go down. It's really that simple, right? The thing is, we're not the broker, and we don't get to see that, right? And because if we did, it'd be unfair, right? And illegal, right? Because you would never lose if you could see that kind of thing. So we have to do our best to kind of measure and guess, right? That's why this is speculative trading. So obvious levels of support and resistance we talk about, and the quality zones, notable candlestick formation. So it's like all those things require, like, for you to have studied it and understood it. But I only look for like a handful of types of candlestick formations and a handful of types of zones. So it's just a matter of, like, these are on the bottom three for a reason, honestly. Like the quarters and a momentum, like it's like a number, right? You're measuring, you are looking at something fixed, right? And so that's super easy to determine. Okay. Oh God, why is my computer beeping like crazy? Okay, a lot of tech issues today. The alternative is to have spoon-fed picks from a reputable source, which means either in my book, that's someone with 20 years of institutional experience, and you got to pay for it, right? So this channel you don't pay for at all. This is a free channel and this is a free vlog, and if you're watching, then you're actually getting a lot of like stuff that other people charge thousands of dollars for, that I'm giving you totally for free, because I think if this is the basics, honestly. Like you gotta at least get this, and then save your money to pay for something that's of higher quality. You are gonna end up paying more money for spoon-fed trade picks, right? But pay for the quality. Just don't ignore that. Just pay for the quality. Okay, that's about it for today's video. I hope everything went okay with this broadcast, because I had a lot of issues on my end, looking at all these error messages and things that crashed, and I don't know that I even was able to do this properly. So hopefully all this kind of stuff made sense, and stay tuned for tomorrow. Tomorrow is Friday. Yay, happy Friday. And so I'm going to be doing my typical trading vlog, and I'm going to be playing the Financial Freedom game as well, so you get a double dose of me. So until then, be well, be safe, and stay tuned for the next video from YouTube.